The World Trade Organization is warning of a global economic slowdown, with exports disrupted by the U.S.-China trade war, Brexit, and plunging factory orders. In April, the WTO estimated that trade in merchandise would rise by 2.6% in 2019. Now the organization has dramatically downgraded that forecast to 1.2%. The trade flow, even at a slight increase, would mark the weakest pace of growth since the end of the 2008 global financial crisis. Amid the trade war, U.S. imports from China were down by 12% over the first 7 months of 2019. Chinese imports from the U.S. fell by 28%. Meanwhile, economic activity in Europe is sputtering and factory orders shrinking over fears of Brexit and a UK withdrawal from the European Union without a negotiated deal. Roberto Acevedo, the Director General of the WTO, put substantial blame on trade disputes. He said resolving trade disagreements is critical to global economic well-being. He said the darkening outlook for trade is discouraging but not unexpected. Beyond their direct effects, trade conflicts heighten uncertainty, which is leading some businesses to delay the productivity-enhancing investments that are essential to raising living standards. This data from IHS Markit, a global business intelligence firm, quantifies the global uncertainty. It shows new export orders from purchasing managers falling from 54% in January 2018 to 47.5% in 2019. Anything below 50% is seen as a sign of economic contraction. The research finds economic declines in Japan, South Korea, Indonesia, and Malaysia. That's on top of data showing that factory activity in the UK has fallen for 5 straight months. Factories in Germany, Russia, and the Czech Republic were operating at their lowest output levels since 2009. Chris Williamson, a chief business economist at IHS Markit, says there's likely worse to come. He said businesses remain downbeat about the year ahead, with optimism around a 7-year low amid trade war worries, signs of slowing global economic growth, and geopolitical concerns. For now, the WTO said it expects improvement in world trade next year with 2.7% predicted growth. But that's down from an original forecast of 3%. And the group says its projections are heavily weighted to the downside.